Everyone is chasing Nvidia, Palantir, and the usual AI darlings. But some of the biggest AI winners might be three boring companies you've never even looked at: a broker, a streaming box company, and a connector manufacturer, all of them quietly using AI to boost profits, lock in customers, and tap into the same AI wave without selling a single GPU. In this video, we'll break down three real businesses: Interactive Brokers, Roku, and TE Connectivity. We'll look at how they're using AI inside their operations, what's actually showing up in their numbers, and why some investors think they're long-term winners in the AI revolution. This is not financial advice. It's education and research to help you build your own watch list and do your own due diligence. If you enjoy deep dives into AI, semiconductors, and infrastructure plays, hit that like button and subscribe so you don't miss future videos. Before we jump into the stocks, let's quickly build a simple AI investing framework. Instead of asking, "Does this company do AI?" ask, "How does this company use AI?" One analyst breaks it down into four key AI vectors. Number 1, design and discovery, using AI and modeling to create new products, explore new markets, or hyper-target the right customers. Number 2, intelligent agents, chatbots, virtual assistants, AI co-pilots that help customers and employees make better decisions. Number 3, Internet of Things plus AI, physical devices and sensors feeding data into AI models, which can then automatically adjust systems in real time. And number 4, capital efficiency, using AI to optimize supply chains, underwriting, pricing, inventory, and basically squeeze more profits from the same assets. Keep this framework in mind, because we're going to map each of our three stocks to these four AI vectors. Let's start with Interactive Brokers, ticker IBKR. At first glance, it's just an online broker. But under the hood, this is basically a highly automated trading and clearing machine. They've spent decades building technology to handle everything from the biggest hedge funds to small retail traders. Today, AI is woven deeply into the business, from customer support and onboarding to trade routing to research tools. Recently, Interactive Brokers rolled out a tool called Ask IBKR, an AI assistant that lets clients type natural language questions like, "How does my portfolio compare to the S&P 500?" Or "Which positions hurt my performance the most this quarter?" Within seconds, it generates charts, breakdowns, and insights that used to require digging through multiple reports. When you combine that with their existing AI-powered chatbot, IBot, you start to see the pattern. Interactive Brokers uses AI as an intelligent agent layer on top of a massive global brokerage platform. On the business side, the company recently passed 4 million customer accounts and continues to grow client assets and trading activity while keeping costs low through automation. It's a perfect example of intelligent agents, AI answering client questions and guiding decisions, and capital efficiency, automation, and AI keeping the cost per trade extremely low, supporting strong margins. On top of that, Interactive Brokers is expanding into prediction-style markets, products that let traders take positions on events like elections, economic releases, and other outcomes. It's early and heavily regulated, but they already have the global licenses, the trading engine, and the customer base. If this area grows, AI will play a huge role in modeling probabilities, pricing risk, and managing these event-based products in real time. So for IBKR, the AI story is not about selling software. It's about embedding AI into a brokerage model that already scales globally. Next up is Roku, ticker ROKU. Most people think of Roku as that little streaming stick you plug into your TV. But the real story is that Roku turned itself into a software and advertising platform. Their operating system now powers tens of millions of smart TVs and streaming devices, and their job is to answer one simple question for viewers: what should I watch next? This is a classic design and discovery and intelligent agent problem. Roku uses recommendation algorithms and viewer data to suggest shows and movies across different apps, not just within one streaming service. On the monetization side, Roku is becoming an AI-powered TV ad network. In 2025, Roku announced a major partnership with Amazon Ads. Together, they give advertisers logged-in access to roughly 80 million US connected TV households, representing more than 80% of the US CTV market, all reachable through Amazon's DSP. Early results showed campaigns reaching more unique viewers and cutting down on repeated ads. That's AI improving ad targeting and frequency in real time. At the same time, Roku's platform revenue, which includes advertising and subscriptions, has been growing faster than device sales, and the company has started to return to profitability and even announced stock buybacks. So Roku is evolving from cheap streaming hardware into a data and AI-driven ad platform sitting in the middle of the streaming ecosystem. For investors, the key question is, can Roku turn this data and AI advantage into durable cash flow? If they keep improving recommendations, reducing ad fatigue, and helping brands reach very specific audiences, they can justify higher ad prices and deeper partnerships. The flip side is risk. Roku faces intense competition from massive players like Amazon, Google, and TV manufacturers. But if their AI recommendation engine and ad tech remain best in class, the scale of their installed base becomes a serious moat. Third, we have TE connectivity, ticker TEL. On the surface, this is the most boring name on the list. They make connectors and sensors, all the tiny plugs, sockets, and components that move data, power, and signals inside cars, aircraft, factories, and data centers. So where does AI come in? Think about the Internet of Things plus AI. Every smart sensor on a pipeline, every server inside an AI data center, every high-speed cable linking GPUs together needs reliable, high-bandwidth connectors. TE connectivity is deeply involved in AI data center infrastructure. They design high-speed I/O cables, optical transceivers, and power solutions that help hyperscale data centers handle massive AI workloads. They're also moving into areas like grid infrastructure and utilities, where rising AI-related power demand and electrification are driving investment in new hardware. In simple terms, as AI models get bigger, data centers need more bandwidth, more power, more cooling, and TE provides a lot of the physical connectivity that makes this possible. Unlike a software company, TE connectivity doesn't reprice subscriptions every month. It sells critical components into long-term trends. AI data centers, electric vehicles, smart factories, modern power grids. The upside is that, if AI adoption keeps exploding, demand for these high-performance connectors and sensors can grow for many years. The downside is that this is still a cyclical industrial business. Growth depends on capex cycles in autos, factories, and data centers, and the stock can look fully valued after strong runs. But as a picks and shovels play on AI and electrification, TEL is a name many investors simply overlook. So how do these three fit into our AI framework? Interactive Brokers is all about intelligent agents and capital efficiency, using AI assistance and automation to scale a global brokerage at low cost. Roku leans into design and discovery and intelligent agents, AI that figures out what you should watch next and which ad you should see across dozens of apps. TE connectivity is a pure IoT plus AI infrastructure story, the physical layer that lets sensors, servers, and power systems talk to each other at AI scale. None of them are hyped AI story stocks, but all three are using AI in very real, measurable ways. Does that mean you should rush out and buy all three? Absolutely not. Each one has its own risks. IBKR is tied to trading volumes, interest rates, and regulation in areas like prediction markets. Roku depends on advertising budgets and faces giant competitors. TE connectivity is exposed to industrial cycles and big capex decisions from OEMs and hyperscalers. Your job as an investor is to decide which business model you understand best, whether the valuation makes sense for your time horizon, and how much AI exposure you already have in your portfolio. If you found this breakdown useful and want more deep dives into AI infrastructure, semiconductors, and under-the-radar names, hit like, subscribe, and tell me in the comments. Which of these three would you research further? Interactive Brokers, Roku, or TE connectivity, and why?